Hey everyone, Longacres Finance here. Welcome back to the channel, where the mission is to seek out the best dividend stocks for safe, reliable, and growing passive income. If that is your goal as well, join the community and subscribe to the channel. So I decided to go ahead and do it, convert my Roth IRA portfolio in M1 Finance to the allocation I said I would. I explained the target allocation in my recent video about the past returns of the top 10 high-yield stocks. That video received a comment asking that I share a link to the pie. So that is what I will be doing in this video. I'll show you the pie as it looks now, I'll share a link in the description, and I'll talk about the one mistake I already made and my expectations for this portfolio. Let's start by taking a look at the actual pie. Here is my Roth IRA portfolio that has been on M1 Finance since about middle of January this year. I originally opened this account with Betterment, but I decided to move it to M1 so that I could self-manage the portfolio. The original asset allocation was predominantly index funds, with a pretty aggressive allocation. The allocation now is 14% to index funds, 6% to my 3 favorite monthly dividend stocks, 25% to the top 10 high-yield stocks from my monthly watchlist, and 55% to the top 20 high-growth dividend stocks from my monthly watchlist. So in total, there are 37 unique positions in this portfolio. The one mistake I made when setting up this portfolio is that I didn't think through that M1 Finance does not allow you to have fractional allocations. The minimum you can allocate to an individual stock or fund is 1%, and you can only add in 1% increments to that allocation. Seeing how I want to allocate 25% to my top 10 high-yield stocks equally, I would need to allocate 2.5% to each stock. Same with the 20 high-growth dividend stocks. 55% split equally to 20 stocks is 2.75% per stock. There is a way to go around this that I thought of after I already executed all the transfers. If I set up 4 separate pies, and set the allocation to each of those pies equal to my target allocation, so for example, the high-yield pie would have an allocation of 25%, and each of the 10 high-yield stocks would have an allocation of 10% within the high-yield pie. Within the entire portfolio, each of the high-yield stocks would have a 2.5% allocation. This would have also been visually more appealing. Perhaps I'll make the change to that structure at some point in the future, although moving stocks from one pie to another pie isn't the easiest in M1 Finance. I've tried doing this in my taxable portfolio and it didn't work. I read on a Reddit forum that you just enter a sell trade in one pie and an offsetting buy trade in the other pie, and the position should move from one pie to the other. It didn't work for me. Also, the fallacy with this type of stock movement is that M1 Finance executes trades during market hours, so the value of the position I would like to move may change. If the value drops, the trade may not execute, and if the value goes up, I may be left with a few cents left in the original pie. This mistake isn't a huge deal for me, since I don't use the Auto Invest feature within M1 Finance. It's a good automation tool, but what I don't like with their Auto Invest feature is that it attempts to bring your portfolio to equilibrium. In theory, that is nice, but in practice, I found that I would often have small uninvested balances, because M1 Finance won't execute a trade for less than $1. I personally prefer to have all my cash invested in this account, and for that reason, I manually enter all the trades in my portfolios. I know it defeats the purpose of having a smart brokerage account, but you know what? I like doing it, and I like the control, so I'll keep doing it. Back to the portfolio. I switched to this allocation on July 15th, so exactly mid-month. I'll be comparing the results against the S&P 500 return, just to measure how well my asset allocation performs. July might be a mixed bag of results, seeing how I started mid-month. Also, last week and today were not the prettiest days in the market. It looks like we may be in the middle of a small pullback. I wanted to switch to this allocation because I believe in my monthly watch list, and this way I can properly test them out with my own retirement funds. What's the worst that can happen? No retirement for me? In all honesty, I have a strong belief that this portfolio will outperform the broad market and offer above average returns over a long period of time. I can't access these funds for another 20 plus years without a tax penalty, so I'll have a good window to prove that my watchlists work. The goal is to have a long-term annualized rate of return of at least 12%. This is a dividend portfolio, but the bulk of the allocation is to dividend growth stocks, so it probably won't yield a whole lot in the beginning. But like I said, I can't touch this money for 20 plus years, so I don't really care how much it yields today. I think the initial target allocation yield is around 1.65%. Each month when I update my monthly watchlist, I will update the allocation of this portfolio to the top 10 high-yield stocks and the top 20 high-growth stocks, so there will be quite a bit of turnover of positions in this portfolio. But again, this is a tax-free account, so I can make all the moves I want without incurring any tax liabilities. I would never follow this type of fluctuating asset allocation in a taxable portfolio. The tax burden would be too large, and I don't even want to think about the additional work around tax return time. Let's run through all the holdings quickly and some statistics to wrap up. The 2 index funds that I own are VUG, the Large Cap Growth Fund, and VGT, the Information Technology Fund, with a 7% target to each. My 3 monthly dividend stocks are Realty Income, Stag Industrial, and Main Street Capital, with 2% allocated to each. The top 10 high-yield stocks are 3M, Amgen, Broadcom, Cisco, CMS Energy, Evergy, Lockheed Martin, MT Bank, Pepsi, and Principal Financial Group. And the top 20 high-growth dividend stocks are Applied Materials, Charles Schwab, Cintas, Domino's Pizza, Home Depot, Humana, Intercontinental Exchange, Lowe's, Market Access Holdings, MasterCard, Northrop Grumman, Roper, Sherwin-Williams, SS&C Technologies, T. Rowe Price, Texas Instruments, Thermo Fisher Scientific, Tractor Supply, United Healthcare, and Visa. I'm currently estimating about $78 of annual dividend income from this portfolio. As you can see, there is already some drift from my target allocation, with the growth stocks and the high-yield stocks moving higher. I plan on trying to keep this as close to target as possible with my weekly contributions. I'll make another update of this portfolio in August with the final July return and the new updated asset allocation. If you guys have any questions or suggestions, leave a comment below, or you can reach me via email. Thank you for watching, don't forget to subscribe, and see you next time.